Hello everyone! In my previous video, I discussed how SpaceX's IPO may be rewriting the wealth landscape. We talked about how major trends such as artificial intelligence, robotics, life sciences, and the space economy are reshaping the very logic of wealth creation. After that video, many people asked me several important questions. What do these changes actually have to do with my family's wealth? If the pace of change continues to accelerate, what does a wealth structure really mean? What will wealth management actually be managing in the future? How will the fundamental logic of wealth management evolve? Today, I'd like to answer those questions by looking at wealth management through the lens of 5 essential categories of risk management. First layer, managing life risk. In the past, many people assumed retirement meant retiring at 65 and living until around 80. Planning was relatively simple. But what about the future? If a 60-year-old person may live to 95 or even 100, retirement could last 35 to 40 years. This means that the biggest risk may no longer be a market decline. In wealth management, there is a classic risk called longevity risk. In the past, people worried that they might not live long enough to fully use their retirement savings. In the future, more and more people may face the opposite problem. They are still alive, but their retirement assets have already been depleted. For example, a family with $2 million in assets may have believed in the past that this was enough for retirement. But if future healthcare costs rise, life expectancy increases, long-term care needs grow, and retirement lasts longer, that $2 million may no longer be sufficient. Therefore, wealth planning must recalculate retirement cash flow, healthcare budgets, long-term care needs, pension withdrawal strategies, and the timing of Social Security benefits. These are all important components of future wealth management. Second layer, managing career change risk. AI is changing the job market. We have already seen some large technology companies begin to use AI to replace certain customer service, junior software development, and analytical roles. In the future, the jobs affected may not only be blue-collar roles, but increasingly white-collar and professional roles as well. For example, accounting, legal assistance, customer service, translation, software development, and financial analysis may all be affected by AI. In the past, a person's professional income could last for 30 years. In the future, a person may need to transform their career every 10 years. Therefore, wealth management cannot focus only on investments. It must also be considered whether a family's income sources are too concentrated, whether they have the ability to rescue or re-enter the job market, whether they have passive income, and whether they maintain adequate emergency reserves. If a family's entire income depends on one industry, and that industry is disrupted by AI, the real issue is not how much the stock market has fallen. The real issue is that the family's cash flow may be at risk. Third layer, managing asset concentration risk. This is one of the most common issues I see among Chinese and cross-border families. Many people hold large amounts of company stock, technology stocks, real estate, or assets concentrated in a single country. These assets may have performed very well in the past, but as the speed of change accelerates, any industry may be disrupted. For example, during the 2000 dot-com bubble, many investors held only technology stocks and suffered significant losses. Today, if someone holds only AI stocks, only one technology giant, or only real estate in one country, they may be facing similar risks. What a wealth advisor truly needs to help clients think through is no longer simply what to buy, but how to build an asset system that can respond to future change. This includes how to allocate emergency cash, how to manage short-term funds, how to position long-term growth assets, how to plan retirement income, how to balance risks across different countries and currencies, and how to avoid excessive concentration in a single industry, market, or asset class. Fourth layer, managing tax risk. Tax planning will become increasingly important in the future, especially for high-income families, cross-border families, business owners, and retirees. Here is a simple example. Two families both have $5 million in assets and achieve the same investment returns. But because of differences in account types, tax planning withdrawal sequencing, and estate planning. The long-term outcomes could differ meaningfully depending on tax, withdrawal, and estate planning decisions. Many of the cross-border families I serve may hold assets in the United States, China, and even Canada at the same time. Without advanced planning, the issues they may face in the future may not only be investment-related, they may also involve taxation, inheritance, and asset transfer. Fifth layer, managing wealth transfer risk. In the future, many families will face a situation where parents are in China, children are in the United States, assets are spread across multiple countries, and different tax and legal systems apply. Many people spend a lifetime creating wealth but spend very little time thinking about how that wealth should be transferred. As a result, the issue often is not wealth growth, but wealth erosion. Therefore, wealth management increasingly needs to incorporate trust planning, will planning, beneficiary designations, family governance, and intergenerational wealth education. This is one area where wealth advisors may provide meaningful support. Many people think the value of a wealth advisor is to tell them what to buy, what to sell, or what to predict. But increasingly, that is not the case. The best wealth advisors of the future will be more like family wealth architects. They help clients build a wealth system that can face change, move through market cycles, adapt to the future, and achieve life goals. If you are also thinking about how your own wealth structure and wealth management should respond to future changes, I encourage you to further discuss these issues with qualified financial, tax, or legal professionals. It's a pleasure sharing my thoughts with you today. I'll see you next time.